Since you touched upon marriage and buying houses, of course, what we have seen, this generation doesn't want to own an asset. They don't buy a house, or they uh, don't own a car, and then they're thinking that they know everything. We don't need to pay. If you only drive, we can just pay and use it. Considering how our parents, they always advise us to invest in real estate, but that's not the same advice we are giving, or best advice are giving to this generation. What is your take on that, in terms of real estate investment? Do we need to have a house as must to have? One, more than once, if we could afford, or not to buy one?
Whether you want to own a house or not own a house, I think it's a personal choice. But if I had to bring in a little bit of financial angle to this, is that I think early on in your life, wherein you're still early or early, you have very little responsibilities. So taking some amount of leverage through a home loan, etc., is a great idea, because you see how previous generations bought houses when there was no access to home loans. Like, you would hear of families saving for 10 years, 15 years, and then building the house, or building the house part by part, because that's when they had access. In the day when you were born, I built this part of the house, then I had some more savings and I built this part of the house. But today we have access to capital through form of loans, so we can do stuff in a very different way. Smart usage of leverage and credit, I think, is beneficial. Then when you're buying real estate purely from an investment standpoint of view, then you want to see that, hey, where are opportunities that exist? At least what you see is that land is a great way to invest in real estate. If you're thinking purely investment, apartment may not be a great way to invest per se, because you have a building which will depreciate over a period of time. It's the land that appreciates, but some communities flower so well that they do exceedingly well. So real estate, unlike equities, etc., is so micro market driven that you cannot give one blanket answer for everything. But I would say that there should be a good division of physical and financial in all personal balance sheets. Early on, use of some leverage by way of loans to buy some of these assets may not be a bad idea at all.
No, let's come to the next topic, wealth management in the digital era. And then two things we want to talk about here, the impact of fintech and AI on wealth advisory. We see a lot of AI products being made available, both B2B and B2C, where, these retail investors and the youngsters, they can see how this particular, product or this share is performing, and they can take the well-informed decision. So how much this, fintech and AI is playing a role in this market, and how effective these are?
I think any form of technology enhances human capabilities. Like, that's how I would think, right? So, and the value add that we bring evolves with time. So, if I'm telling you that right at the beginning of my career, people didn't know mutual funds. So educating them about mutual funds, helping them write those 30 checks to get their SIPs going on, was considered value add. I come today telling somebody, hey, I will help you start one SIP, is no longer a value add, right? Because now that has become very easy because of technology, more access to information. So one, as an advisor, I have to constantly evolve to figure out where my value add comes from. And it can't come from something that I used to do like a decade back or 2 decades back. Again, coming back to technology, earlier, I remember when I was doing my CFA, to calculate certain things, we used to take that financial calculator to the exam. इसका future value क्या होगा, इसका present value क्या होगा, इसका IRR क्या होगा. Then came Excel. Life became even more simpler. Now comes AI. I don't have to create Excel calculators also. I can just write to Ash and say, hey, I am this 35-year-old. I want to retire with this. I need 1 lakh rupees per month, and I want to retire after 10 years. What do you think? How much corpus will I need? And it is great. AI will give me some answer, right? whether right, wrong, etc. So that information and access is available. All of that will definitely help. If used well, we will get asked some questions. So there is going to be I think, very clearly a great role that it is going to play. Technology is already playing a role. AI will further enhance, and there will be more stuff that it will do in the wealth space.
So do you think this AI is going to minimize the risk? That is question one. And whether AI will probably reduce the role of wealth advisors and the workforce involved behind the scene.
Will it reduce the risk? I am not very sure it will reduce the risk. Because where does risk come from is the question that one needs to ask. Where does the risk come from? A risk comes from at times thinking that certain things will behave in a certain way, but they behave in a very different way, right? So I could be driving from my home. I got my seatbelt on. I'm driving under the speed limit, everything else. But somebody else driving in a different direction comes and hits me. A risk can come from there. I did everything right, but still risk came. So I think risk shows up because more things can happen than we imagine can happen. Can it guide us to help reduce this better? It can. It definitely can, right? You can ask them these questions in that, hey, my friend is now doing this land investment. He said I should also try it. What are the risks in doing this? Or what are things that I should be careful of before I do this? It will give me some certain set of questions. Now, how do I follow that up? Is that so? I think technology at our disposal is very good. Your question of will it reduce the need for workforce? I think India needs a lot more financial advisors than currently are there. Why should we have people losing money to chit funds and unregulated products and buying products which are not relevant for them? So we need more advisors telling people why is the right for Lulu. In fact, Professor Robert Schiller, one of the Nobel Prize winners, right after 2008, he wrote a very interesting article and he said that, and after 2008, what people realized in US was that a lot of people bought multiple homes, multiple mortgages without even thinking what they're getting into. So he said in that article saying that personal finance advice should be subsidized by the government for segments which cannot get access to personal finance advice.
In what way and how?
In what way and how he didn't leave it. He would say that why he said that was that because in the absence of personal finance advice, somebody does not have health insurance. One health event and the family is back to poverty. Somebody does not have life insurance. The earning member of the family didn't secure himself sufficiently. The family, the amount of stress the family is, so one is these effects. Then somebody has taken loans or liabilities beyond their means and needs. So which is why you need personal finance advice available to more people. So I think having access to technology with the right sets of regulations and environment means more people getting access to good financial advice. I think is fantastic. So I don't worry about this taking away jobs from a personal finance advice. Having said, one important thing that we have to understand, at least I feel that way, is that for everyone, let's say if I just have a fever, right? If I just have a fever, I can maybe Google and AI and use all of that and figure out what medicine to buy. But now suddenly I have fever for 15 days continuous. I'm not going to rely on Google anymore, AI anymore to figure out what is happening with my life, right? I'm going to go to a doctor, meet a specialist, understand what is happening. Similarly, advisors will go through life stages. At a young, I'm wanting to do 10,000 rupees SIP. Some people will choose to take advice. Some people will do this on their own and they will still be fine. But suddenly now they got this 1 crore because they left their job, their PF accumulated and they are taking a break for a couple of years. Does he have the confidence that person has the confidence to invest that one, or maybe he needs advice at that point. So we come in at different points in time. So I think advisor will still be required. It's just that, like each one of us, our value add will have to evolve with the times that we are in.
Very valid point. Now you talked about the need for more people in this industry. Yeah, if somebody is probably 18, 20 years of age and is looking for a career in this industry, what exactly they need to do, where they need to go for which kind of courses to make sure that they come to this field and they do well.
I think for people who want to make a career in this field, and you can be studying from whichever stream, it does not matter whether science or law or commerce or arts, does not matter. Once you make a choice that I want to come into this field, there are some specific exams that the regulator mandates you need to write, right? And there are certain courses which will help you to do this better if you really want to do this well. Can you name those? Yeah. So like from a mutual fund, so there are multiple regulators, and you have to understand when it comes to personal finance, RBI looks after loans. So basically loans, fixed deposits, etc. comes under banking, comes under RBI. Insurance comes under IRDAI. NPS, etc. comes under PFRDA. Mutual fund, AIF, PMS, stock broking comes under SEBI. So you have 4 different regulators, but we need all of these core products. You have to have knowledge of income tax. I have to have basic knowledge of estate planning, because my client will ask ना कि वो नॉमिनी को पैसा मिलेगा नहीं मिलेगा, जॉइंट होल्डर होना चाहिए कि सिंगल होल्डर होना चाहिए, all of those questions. So I have to have knowledge of all of these areas to be a good personal finance advisor. Now what courses can you do is that you do stuff like CFP or QPFP to become a better advisor. Like these are professional courses not mandated by the regulator. The regulator mandates that you do stuff like NISM 10A, 10B, NISM 5A if you want to do mutual funds. And then there are similarly exams. If you want to recommend PMS and AIF, etc., there are certain exams that SEBI mandates. For insurance, IRDA has an exam that you need to write to become an insurance advisor. So you write that exam. Similarly, for loans, there are no exams as such, but you have to understand. So the point is that there are a host of different subjects that you have to have knowledge of to become a good wealth advisor. People who done CA can also become wealth advisors, also because they already have a very good understanding of tax laws and some of these laws. So I think there are many ways that you can come to becoming a financial advisor. Once you choose to become a financial advisor, I think the qualities that you have to really think hard about is that ability to talk to people, understand them, be empathic to their situation, understanding their requirements, and helping them make those decisions becomes equally critical.
So we talked about the career option for the youngsters. Now let's discuss the startups.
On the career options, I want to add one more thing. This is a fantastic career opportunity for women folks as well.
Why do you say that?
Why I say that is that personal finance advisory for like a lot of times women folks need to go through multiple breaks in their careers, etc., and make choices which are not always commercially driven because they have other obligations that they have to meet. In a personal finance, if you're like a wealth advisor, you can choose to say that I will work with only 30 families. I'll work only 4 days a week. I'll only do so many clients. So you can make these personal choices and create still a place for yourself in that way. And in generally, women folks are more empathetic. They understand the other person point of view better. So that ability to make that emotional connect could be really, really powerful in this field. So,
right now, let's come to entrepreneurship. Somebody, a young kid, 25 years, he wants to do something in this industry. One way is to become a wealth advisor by doing certain courses or working with somebody. And second is that with the use of technology, what are those opportunities for somebody who's looking to start develop a product or do something in this market?
So what courses provide is the background knowledge. Knowledge itself is not sufficient to build a business. And the most important skill set in any business, any profession is the ability to sell. An ability to convince somebody else to sort of let you do,
Give their money to you.
exactly, right? Give their money or give their case to you or give whatever, right? So whether it's a young lawyer, young doctor, young chartered accountant, young wealth manager, letting go of the inhibition of कि मैं तो बहुत छोटा हूँ, मैं तो बहुत young हूँ, what will I do? Having the confidence and faith that go talk to people, and you'll find your space and your place in building that career, right? So is how I would kind of tell something that is do the courses, because when you don't have the experience, you show your degrees. Once you have the experience, you don't need to show your degrees. I've been doing this for last 10 years and I have so many clients and I build this like this. But today, I think the most interesting bit, and where I think some of our older financial advisors have become lazy, is that we are not using the advent of this whole new set of technologies to reach out to more people, advise more people through Instagram, through Facebook, through Twitter, and all of that. And you can still build so much more very differently and look at this problem very, very differently and solve so many other things in this area. So I would say to a younger person is that if possible, try to work with a smaller boutique firm initially, so that whatever you've learned in your education courses, you can practically see how those are being deployed, and then start seeing what else you can bring to the table. There are so much more from a technology standpoint of view, which allows you to leverage and do a lot more than what maybe people 10 years back could do or 15 years back could.
On that note, do you think is there still a space and scope for another Zerodha and group?
I think so. I think so. It's just that the next Grow and Zerodha won't look like Zerodha and Grow. There'll be something else.
What else do you think? Let's see. Where do you see and why I'm giving example of a Grow or Zerodha and Grow, of course, got listed just yesterday. What do you think this Grow is going to be 5 years from now?
I laugh about it because I have had conversations in private about how I didn't see enough value in Grow maybe 5 years back or 6 years back. So I think I don't know. But what I do hear is that people who are thinking big, who have the mindset, who are hungry, will do well. Our country has enough and more opportunities
For everyone.
And so, can somebody come and build another Grow and Zerodha in the next 5-10 years? I think very well can.
We have a huge market.
Yes, enough, more than enough. Large, very large market in all areas, in all segments, in the ultra HNI segment, in the retail segment, in the affluent segment, in all segments, there are enough opportunities for people to build large businesses. It's only the need of mindset of wanting to do something like that.
We talked about those regulators. It's touched on this CB and RDA. If somebody wants to start advisory and they need to be having certain licenses and permission from SEBI and other regulators, what are those prerequisites for those licenses permissions?
There are very different sets of requirements in India, and I'm just broadening this bit from investment. You can be an insurance broker, registered only with IRDA, only doing insurance because there is enough need for insurance in India. You can be a loan provider and only do loans, and there is enough and more requirement for only loans as such, right? Likewise, you can be a holistic wealth manager who does multiple of these things. When you want to do multiple of these things, obviously you will have to, maybe there is something with IRDA that you're doing, there is something with SEBI that you're doing. So you'll have to have multiple such licenses that you will need. Let's talk about SEBI. From a SEBI standpoint of view, there are two sets of ways we spoke about, right? So let's say if one is restricting only to investment products, you can either work on a commission basis or work on a fee basis. If you work on a commission basis, then you have to register as a distributor. So you have to write NISM 5A as a basic exam. Then similarly, you have to write a PMS exam. If you write those exams, you are able to distribute mutual funds and PMS, etc. And you get commission from the product manufacturer for the clients that you recommended it to. If you want to become a registered investment advisor, then that is a license that you have to take from SEBI. Similarly, there is a license for PMS. Somebody says that I'm very good at equity. I want to become an equity advisor. You get a PMS license. You get an AIF license. So you can get all these licenses from SEBI. All of them have certain net worth requirements, certain qualification requirements, certain experience requirements. Obviously, all of that detail you will get through SEBI and maybe some consultants who help you through that process.
All these licenses and then the permissions, whatever you're getting from SEBI is given to individuals or the companies?
Both. There are certain licenses which are open only to individuals and corporates both, and there are certain licenses that are open only to corporates.
Only to corporates.
Yeah.
Let's talk about the role of robo advisors and those finfluencers. And why we talk about the young generation, they are dependent so much on the social media. And there are a lot of people, of course, and I'm pretty sure majority of them are not regulated, not registered advisors. And they are, giving advice which is probably harmful. So what is this role, this robo, and robo, you were building earlier as a robo advisor over Paisa, whatever product you were trying to build. But what is your take on these two entities or two products?
Two very different sets of things, right? I think both can have a large positive influence to a advice-starved country like India.
But please explain what is robo advisor.
So what is a robo-advisor is that I think at a very basic level, what does an advisor do? And I'm simplifying it, right? So I ask a certain set of questions to my clients. Based on those certain set of questions, I come up with some kind of an output to say that, hey, this is what you should be doing. A robo-advisor does something very similar. He will ask you a set of questions based on the algorithm at the back and tell you that this is what you should be doing based on that. Let me give you a very simple example. Let's say we created a robo-advisor for retirement planning. Okay? So what is the kind of question? So what do you want to know? You want to know that, hey, how much money will I need when I retire? How much do I need to start saving from today for me to retire? So the robo-advisor will ask, what kind of income are you earning? What kind of expenses? And who else is there in your family? And when do you think you retire? Will you get any other retirement benefits from the company that you're working with? Or have you already saved something for the retirement? And then basis that tell you that, hey, Uday, you need to start saving 30,000 rupees per month from now onwards for the next 20 years. Then you'll get, if the return outcome is like this, then you'll get a corpus of 10 crores and that should be sufficient for the next 20 years of your life. So all of that it can do very easy. It can give me that data input, which is the information. What the robo-advisor can't do is that it cannot force me to take action. And this is where a lot of times, and bringing in behavior back here, is that think about health. Who does not know what are the good things to do to have a good health? Everyone knows eat well, sleep well, exercise regularly, don't overdo anything. How many of us are able to follow it? Why are we not able to follow it is because the repercussion of what we don't do today is so ahead in the future, we are not able to relate to it. Similarly, planning for retirement is so ahead in the future. Should I be thinking about this weekend going to Goa with my friends or say that नहीं वो 25,000 रुपया बचा के मैं retirement के लिए save कर लेता हूँ, ये करो ना, right? So there is a disconnect with my future self, which is why I'm not able to do some of these things. So robo-advisor will give me all the ideas, but I still need somebody to motivate me. why does a trainer coming to your home actually work? Because you no longer
Motivated enough.
now, right? The guy has ring the bell and he's there in front of your house. Now, whether you slept at 2 o'clock in the night or 10 o'clock in the night, you have to now wake up and do something that he does.
But is it legit, this robo-advisor?
It can be legit. Absolutely, it can be legit, right? Because finally, the robo advisory will have certain license. It won't have a separate license, but when we were attempting to do that, is that we took a SEPI license as an advisor. So there is still some human in the loop designing these algorithms to say that what can do. It cannot solve for all cases. It can solve for some simplistic cases. As technology improves, maybe it can solve for more complex cases, right? So that's where I think robo advisor, what it can do is that, and this is a very interesting discussion I was having with a friend, is that he said, I came from work at 12 o'clock in the night. Now suddenly, this is the only time today I got, and I have to go for a friend's wedding and I'm searching for clothes. Can I go online, search for clothes, buy clothes? I very well can. We have the technology, we have these apps. Same problem, I want financial advice at 1 o'clock in the night because that's the time I got. That's when my brain is now thinking about money and finance and numbers. Now, who is picking my call? Bankers are all asleep, advisors are all asleep. If I have technology access at that point in time saying that, hey, I'm 25-year-old or I'm 35-year-old, this is my situation, this is what I want, what are things that I should be doing, set this up, and it's possible. Until technology can solve for a lot of these things. So I would say that, hey, if done well, if done smartly with some empathy building to that whole process, a robo-advisor can do a great value add because we are a naturally advice staffed economy. So we'll get more people getting access to advice. The quality of advice and all is a problem we should think about later on. पहले कहीं से start तो करो.
Yeah.
Right? Like before you get like this multi-speciality hospital, first have some basic clinic in place. So that's the parlance out there. Coming to influencers, like I said,
Is there any regulation around that? Because I've
said some SEBI came with some notification. Frankly, I'm not 100% sure of what exactly goes into it and what does. But if you see what is happening across the world, right? I think I was just reading about regulations in China. We said that, hey, to become a influencer in any segment, you have to have the basic education in that segment. So I cannot be a influencer who's studied arts. So I think everyone is evolving, right? The regulator is also trying to figure out what is happening. We are also trying to figure out. So can the influencers have a positive impact? They can definitely have a positive impact. I think some level of regulation is important,
right,
to create guardrails. At the same time, regulator cannot always come because if regulator starts putting frameworks for everything, there is space left for innovation.
right.
So we'll always have this tug of war between innovation and regulation and whatever. So I would say that there is definitely need for regulation. We cannot have in certain segments people giving advice just for their personal benefit. But it's a hard call to solve.
Related question: how SEBI has been dealing in this market in terms of regulating and controlling, the investment or all these advisors, and then what do you think? How much more they can do, and where they are probably lacking?
I think SEBI's big role is to protect investors, but I alone cannot protect the investor. There has to be an ecosystem that protects the investor. Regulations alone cannot protect, right? What is regulation? Every time now we log into our equity apps, you see that 9 out of 10 people have lost money in FLO, right? It keeps giving this rent, yes. But we are blind to it. It's like smoking is injurious to our health, but I am blind to it. I don't want to see it. I'm not interested in seeing it. So the whole ecosystem has to evolve to protect investors. SEBI alone cannot do it. SEBI has to create products, has to create the right incentive structures to bring in right type of talent. So the incentive structure cannot be only about, give the best to the consumer all the time. If you just give only to the consumer and not to the product manufacturer and not to the middleman or to the distributor, the advisor in between, what is the incentive for a smart, well-educated person to become an advisor? So everyone has to be well incentivized to build the ecosystem. You need the best of guys building the products. You need the best of the guys giving the advice. You need the best of the guys creating regulations. That's when we create an ecosystem that thrives and creates value for everyone. So I think when it comes to personal finance, there is a slightly different challenge here because it's not one regulator who has to solve.
Right.
Because see, Santosh, if I'm helping you with your personal finance, I have to have some knowledge of income tax, that is finance ministry. I have to have some knowledge of banking, that is RBI. I have to have some knowledge of insurance products, that IRDI. I have to have knowledge of pension products, that's PFRDA. Now, nobody is sitting regulator and saying कि hey, financial advisor का regulation है ना, हम ऐसा बनाते हैं कि he has access to all these regulators' inputs and all the regulators are hearing this person. If not, how do I do? I need to at times, the same person is coming and asking कि मैं अपना loan return कर दूं कि मैं mutual fund में invest करूं. I cannot wear only my mutual fund hat to say that नहीं और mutual fund करो.
Right.
I have to have some understanding of how to think about his loan situation also. So it goes across. So I think the regulator's role has to be both development as well as this. And we are still at a stage wherein we need enough more advisors to come on board.
See, if you look at it in a country like India,
Yeah.
where in absence of these regulators, probably the public interest can be taken for granted. Now, coming to the certain products which are unregulated, and the government has given advisory that these are unregulated products, but people are using those products. People are investing in those products, taking a risk. What do you think the future of those products?
See, till the time being, human beings are human beings. We are driven by greed and fear. And till the time being greed and fear exist, these products will exist.
We exist.
Yeah, right. I'm saying you knock off one, like we all keep getting these odd Facebook requests or WhatsApp requests wherein somebody else's photo, your photo or my photo has been put and saying that, hey, I am in a meeting, my UPI is not working, can you transfer me money? And some people will do that transfer also and lose money, right? So I think in certain cases, regulations, better technology, more education will help, saying that stay away from these scams. But many a times we see cases where people just get so attracted by the false data being presented, saying that hey, our portfolios have earned 100% over the last 12 months, and it's very easy to show, right? You can now create fake videos also and fake images, and people say, हाँ इसका पैसा बना है मैं भी डाल देता हूँ. And initially when you give him 1 lakh rupees, he will give you back 2 lakh rupees, and when you give him 10 lakh rupees, then he's run away with that 10 lakh rupees. So I think there is only so much that the regulator can do. Some common sense also, and when people get driven by greed is when
The problem starts.
the problem starts. And till the time being, we are human beings, we make mistakes.
Right. Financial independence and early retirement. We talked about retirement and what we should do because there's only retirement happens only once. And of course, as a wealth advisor, wealth management company, you would say you plan early, start early. Yeah, plan for your retire.
Yeah.
But I don't know today's generation, this Gen Z and millennials, whether they are that driven. Of course, they are well informed, but they are that driven to plan that early. That yes, I want to plan for my retirement. They're living in today's. They don't think about tomorrow. So, is that early retirement is a really realistic goal in India today in 2025?
So one, I think I have no comments on whether Gen Z or millennials or alpha. I think we all live to what our peer set is and how we think and how we behave very, very differently, right? Because we come up in different times. And because we have come up at different times, every generation feels ki yaar, previous generation didn't know, and the future generation does not know, right? Matlab, everyone who's sitting here thinks that the kids don't know and the elders don't know. We are the only ones who knows. So I think everyone is true to what they have been born to, what they have, the context and their environment, right? This whole thing of retire early, fire, and whether people are thinking about it or no, I think this is all very good for newspaper articles and media, etc. Saying you want to do what feels natural and right to you. There could be a 30-year-old who's not driven by commercial outcomes and who takes holidays or long breaks every 2 months and goes and for a trek. And there could be a 65-year-old who's still as commercially driven as he was when he was 21 years old. So what is true for one person is true for that person. So I come from the place that, hey, you do what feels right to you, not because everyone else is going for this fire or whatever it is, right? Can people think of long term? Obviously, people can think of long term. Will a lot of people think of long term? I don't think so. Because naturally, humans are not designed to think long term. Yes, we are not designed to think long term. Whether it is for health or for wealth, we are not designed to think long term. So that's where we need some help before it's too late. At the same time, I made all the money, I retire early. What am I going to do? The mind needs to be occupied.
Here I disagree. Of course, retirement doesn't mean you become a
Exactly.
yogi or a monk. Retirement means I want to do something what I enjoy, not necessarily doing for money. Yes, so that's what somebody wants to retire at 30. That doesn't mean he's going to sit at home. He will do something what he likes to do. That doesn't have.
And why not apply that choice today?
Absolutely.
Why not apply that choice? Well, why do I have to go through 25 years of struggling of doing stuff that I don't want to do to retire early? I'm saying the challenge, and this is maybe philosophical and maybe all of that, and we don't know. Like, no, I just because I happen to study law and now I have to be a lawyer all my life, whether I want it or no, I have to be a lawyer all my life. Does not make sense.
See, this question is very important because in India, even today, majority of the people, they want government job. Yeah, where there is a secured, there is a retirement pension, and that's the reason people wanted a government job. And until about 20 years ago, so many people had that job, and today the things had changed.
Yeah.
Now it was taken for granted that my future is taken care of. I don't need to worry. But today, our future is not secured. Yeah, we have to plan. Yeah, and that mindset has not developed. We are not planning. I do not know the reason, or probably people are planning, and I don't know those people.
I think yes and no. I think I'll go back to say that, hey, we are starved for about planning, but it's like, are we all healthy? Like, and which is why there are a lot of similarities that you can draw from health and wealth, right? Why are we the diabetic nation of the world?
Our food habits are not so good.
I'm saying ki it is something that has happened now, right? So we let go of something that we used to do. We are doing something that we should not be supposed to doing, and maybe it is better access to fast food and sort of all of that saturated foods, etc., etc. So what has it taken for us to do? Because a lot of times we're not thinking of consuming. Like, just think about sugar, and we keep, like, I have 2 kids, and we keep talking about like the access to sweets and desserts that our kids have today. We never had that kind of access as such, right? We never had that kind of access. So does it make them better or worse? And that's where I see, let's say if I talk about my kids' school, they're approaching it in a very different way. Can the kids themselves become the change makers? and do things and get better control of their lives by knowing what goes in their food. So either we can say that take an approach कि यार no कोई planning नहीं करता है, बच्चे हैं, बच्चे लोग क्या planning करेंगे, or we can take an approach कि बस this 20-year-old, 18-year-old, 25-year-old has all that it needs to do what is right, and just the right place, right education, right peer group, and he will do things. So I'm not that I would say pessimistic. I'm a lot more optimistic. Having said that, as such, it is challenging for human beings to think very it is very hard for us to think way ahead in the future.
So all this while we talked about our Indian society and culture. Do you think our the financial literacy, financial behavior is different than the Western society? In good way or not? So?
No, I think certain behaviors will be different. I think Indians are still naturally savers. We still don't use as much credit. Some of these things are changing in the hinges. We are becoming more users of credit, etc. Western countries live on credit. A lot more credit. Certain things are common across the board because finally we are all human beings. Greed and fear is the same characteristics. Whether you go to US, you go to Europe, you go to India, you go to Asia, wherever, right? But you're naturally savers, at least Asian economies, you see, because again, it's our history that has made us come up. But some of that can get forgotten and will get forgotten because the newer generation now has no dependence, has far more relaxed and don't need it. So some of them are common, some of them are not so common. From a behavior standpoint of view is how I would put it. But some of these things are changing. I think we are seeing a lot more access to credit and people being very comfortable using credit. There was a time when people would not like to use credit for anything, but that is changing. And with that change, what needs, and I keep telling this to people, is that as soon as you start thinking and using credit differently, your overall consumption of other financial products also has to change. I took a home loan, I should buy a term insurance. पहले पेरेंट्स नहीं लेते थे क्योंकि पहले वो लोग होम लोन भी नहीं लेते थे. That's right. But now I am taking, like I'm 30-year-old and I've taken a 1 crore loan. I need a 1 crore insurance at the bare minimum because I need to make sure that my family is protected and that liability does not fall on their head.
So the need has increased, or we are spoiled for choice?
And we're not spoiled for choices. I think we have more access, and which is what is human ingenuity, is that it always tries to do more and more from wherever we are. And when we do that, we have access to more of these things, whether tools, products, services, etc. Right? In Bangalore, etc. We are spoiled, right? Oh, bhul gaya main ye lana. Zepto kiya, Blinkit kiya, Instamart kiya, and fatak se it comes to you, right? Now, is it good or bad? How do you judge that?
So it's like, we were taught in my school that Kirana store versus a supermarket. If you go to Kirana store, you will ask for what exactly you need. Nothing more, nothing less. But if you go to supermarket, you have access to everything. And if you wanted to buy 2 things, you will end up buying 4 things because you can pick up and touch and feel and you will buy. Yeah. And that's what is happening today. Second last question.
Yes.
Of course, we still have a long way to go, but the financial literacy is not taught in schools and workplaces. What is your take on that? How important it is that we need to teach our children, our kids in school, and if they are not taught at workplaces, how to take care of your health, your wealth, and of course your future. That includes your taking right insurance and why it's important, and plan for future and plan for your family.
I think very important. There is no second doubt, no second thought about it. I think personal finance as a subject has to come across the board, has to be taught to kids, has to be taught to college students, should be part of, if any company is getting new people on board, should be part of their onboarding process itself, because this is the first time that they are getting money in their hands. They should know what are things they should do, what is responsible use. People will still do what they need to do, but at least they should know what are their choices and options. So I think there is definitely a lot more work that needs to go there, that we should all sort of do. And I think there are many progressive organizations and schools which have started doing such stuff, and they've started doing these financial awareness programs for their, a lot of companies are doing financial awareness programs for their employees, etc.
The last question, what advice you would give to somebody who's just starting his career in terms of, financial planning, in terms of insurance and everything else which comes along?
I think basic advice is first save and then spend. Is always the golden mantra. Like, don't wait for the end of the month to figure out how much is left and then save. Whenever you get your salary, that day itself, put aside something, and rest of the money is yours to spend. So, and to think of it nicely is that just think of what you put aside as something for your future self. Okay, this is for my 25-year-old Uday. This is for the 30-year-old Uday. This is for the 35-year-old Uday. If you think like that, and build this muscle of savings. It's a muscle that you need to build, and because credit products are now so easily available, it does not allow you to build that muscle. But you say that, hey, if I take a holiday, I will take it only for my savings. So you start saying that, hey, I will, let's say you have a plan to go for a holiday in December. You are in January. Start putting aside that 2,000, 3,000 rupees in some debt fund or liquid fund. Saying that, hey, I will have 30,000 rupees by the end of December and I'll use that money to go for holiday versus taking a loan for that holiday. By doing this for these small, small things, you start building that savings muscle to build for your larger goals like retirement and buying a house and bigger things in life. So that's my advice. So first, save and then spend. I don't do this many often now. Like I used to do a lot of these, what do you call them, programs, financial awareness program. I don't do them very often. And as part of that financial awareness program, we had built this whole thing called My Money Promise. It's like a
It's gamification.
it's like a poem. It's like a poem. I don't remember it fully, but I maybe read it. You ask for these two companies, a couple of companies that are doing financial education work. And these are all friends of mine. There's a company called FinSafe, based out of Bangalore. They do a lot of financial awareness work. There's another friend, she runs a company called Investography. They also do a lot of financial awareness work. So they just do financial awareness work and could be very useful. Coming back to the youngsters bit, 2-3 things, right? One, making sure that you are sufficiently insured is the first step. So if I break it down, appropriate amount of health insurance, term insurance if the need is, ideally buy it when you're young and healthy so that you can get it cheaper, get it more. But just that your life insurance requirement will keep going up as you progress in your career because you will get married and you'll have possibly kids, etc. So your financial responsibility just climb in the initial 10-15 years of your life, like after you started working. So keep looking at your health and life. Have some kind of an emergency corpus. Again, the need for that has gone away because there is access to credit has become so easy. So nobody needs to create an emergency corpus, but it's good to have that, not to be dependent on anyone else, right? That's what independence is. Then start saving for some goals. Just think of it as a game, as a way to build that muscle for yourself so that as you start earning more, and why you need to do that early is not because you will do something very large. It is because if you've done that when you're young and you've done these small experiments, by the time you are reaching age 35, 40, when you have much larger sums of money, you're not coming from inexperience of what to do with much larger sums, but because you've done this with very small amounts early on, you take that learning and apply it with larger sums of money. So use that experience to sort of do the experiments early on to build the experience when you start saving more serious amounts of money.
Interesting. Uday, it's been a pleasure
listening to you and all the insights you shared, and I really appreciate you taking time out and sharing your information and knowledge with us.
Thank you so much for having me, and it was fun having this discussion with you. Thank you.